Let's bring in Jonathan Barratt, Managing Director at Commodity Broking Services, who joins us now live from Sydney. Jono, we were just talking to Scott Redler, and he was basically telling us that a lot of traders on Wall Street are still trading the wheat play. But from your research and commentary, I gather you've got a bit of wheat fatigue.
Karen, it's been a story that's been with us for a while when we've been noticing what's happening in Russia. When we look at the overall picture, we could see that there would be a squeeze, but we're really not confident that that squeeze is going to continue, just given where world ending stocks and given, I guess, in the fact in the US that wheat stockpiles are up to around about that 25-year high. So a completely different picture from where we were back in 2008 when we saw wheat run up to 1,200.
So, Jono, if this is a market that is defying the fundamentals, then is it speculative demand that is driving up prices? Are we in a bit of a bubble at the moment that is going to correct?
Look, I don't know at the moment whether it's going to be a bubble that's going to correct. I think there is a floor under the price for wheat at the moment. I think we haven't quite reached it yet, but I certainly fear the onset of the move up to 800 was purely based on the back of fear, and also fund managers, I think, moving to try and get on top of a good trade for the end of the year. So it was fear and fund activity, I think, that drove to those highs, but I still do feel that there is an underlying support for wheat, given that we don't know what's going to happen next year in terms of the weather front.
All right, so we've got a floor under it, but having said that, the numbers we've got on wheat right now after the sharp run, is that it? Are these the highs for the year?
I think it is. I think at the moment, given that what we're seeing in terms of particularly the crops in the US, which we're looking at sort of another increase in yields there, given what we're seeing in Australia in terms of production, remember we are number 3 or 4 as a major exporter, then I think in fact that we have seen the highs for wheat, given what we know at the moment.
Hey, John, I want to get to the BDI because we've been tracking this for several weeks and it seemed to be suggesting that the commodity picture was getting soft, but you've seen a turnaround in just the last few days. Tell us what's playing out when it comes to freight being moved around.
Yeah, that's okay. We did have a good strong move of about 7.5% last night, Karen. That was very positive. The BDI is a leading index. I mean, it takes time for the actual demand to actually filter in. It's people booking up freight for transport. One thing that I think we have to look at is the fact that the US dollar has been relatively strong, yet we've just seen commodities also strong. So there is this nexus trying to break between the two. And I think when I look at the BDI, that gives me a clue that perhaps China is about to embark on an expansionary path sort of over the next 6 months. Now, just remember, iron ore spot prices have moved up 20% in the last 2 weeks.
So, John, is this an early indication of demand coming back into play? Because we've been talking all morning, and in fact for the last few days, about a slowing growth story based on the economic data that's been hitting the market.
Well, I think this is an interesting thing because, yes, we're seeing that particularly in the US and Euro, okay, and we're very US focused on that. Our growth markets are in China. IP was up at 13.4%. That's pretty positive stuff. And I think that it's China who needs to continue to expand and continue to grow. And I still feel that a lot of our commodities are going to be absorbed into that economy because it is in fact the right time to do it. You know, when your shipping rates are off by about 80%, it makes sense to start shipping some things. It makes sense to increase inventories again when the market is actually thinking that we're actually cooling when in fact we're building stock.
Does it make sense, Jono, for China to ban exports of wheat as well?
A little bit different. China in itself is relatively self-supportive, in its wheat productions. I don't think so at the moment, but let's see what in fact the weather does to them. Obviously there are concerns on the rice side in China, okay, and that's very important, but on the wheat side it's in a different region.
John, we're seeing, I guess, what you could call financialisation of these basic food commodities. Is that a dangerous trend? Can we revisit the 2008 food price spike that caused food riots across the world? And importantly, should government step in here and start regulating these markets?
Well, I think it's going to be a very hard question to answer. The government's tried through that 2008 situation when we did get massive shortages and we had that general fear running with the market. But a lot of the governments have realised that they can't store a lot of the product. We just had Malaysia, where a lot of the rice that it bought as a result of the shortages is actually going off. So it's a management type of scenario in a free world that we have to look at. And yes, the price will reflect supply and demand. It's a very hard question, I think, to try and regulate that. But we certainly do it at the end product, but not at the initial product.
Okay. Listen, John, always very useful talking to you, sir. Thank you for your time. John Barratt, live from down in Sydney.